Welcome to the Retirement Architect with David Reyes. Our program is designed to not only provide insight, but to educate and give you the tools you need to design and build a rock-solid retirement.
And we are here with the Retirement Architect, David Reyes, president and founder of Reyes Financial Architecture. And as always, we appreciate the time, David, providing us with the information and a common sense approach to planning. Today, you've brought along a one-page resource. Are you ready to retire? I don't think this is like, oh, I'm so sick of working. I think that this checklist is helping people move through the questions that will allow them to have a sense of confidence about facing the 30 plus years of unemployment that we fondly refer to as retirement, where we want to have lifestyle confidence. That's what these questions are all about, right?
Yeah, it should be, are you ready to be unemployed? Right. I
Right.
think I like the way you put that. That's a good thought. Like, really? I actually, when you want to lose your job, right?
And
not keep your
intentionally.
job anymore. Intentionally. There you go. And you need some unemployment benefits, right? So we'll figure that out.
Yep, absolutely. And I like the first question on the list. Do you know how long your income would last if your paycheck stopped today? This isn't really just about retirement readiness. This is kind of a perpetual readiness kind of question. Are you prepared if something were to happen to your income? We need to have an answer to that all along the way in our financial progress.
Absolutely. Whether you're working, it's disability, it's, all those kind of things. So fortunately, I don't have to deal with that problem for my clients, and I'll tell you, the answer is, it's rare. I'd say 1 in 100 that's prepared at any level on their own to retire when it comes to the cash flow. They just kind of wing it. And unfortunately, our industry as a whole is not too great at that. It's kind of like the old what's called Monte Carlo simulation, which is just taking random numbers of returns of stocks and bonds and saying, okay, this is what you can withdraw based upon the last 100 years of history. I don't know about you, but that's pretty risky. And unfortunately, most of our industry experts, that's kind of how they do retirement income planning. And that's just not going to work. So we do have to have a plan. We have a saying that we use all the time: want the most amount of income, least amount of risk, and never run out of money. And that's where we have to start from, that kind of foundational, I call it, begin with the end in mind.
Yeah, that Monte Carlo simulator model, David, that always left a probability of success and a probability of failure. If the weatherman comes on and says that there's a 10% chance of rain today, I might feel comfortable leaving my house without my umbrella. But when it comes to my retirement, if there's like a 10% probability of running out of money, I'm trying to do my absolute best to figure out why and eliminate that chance, right?
Yeah. It's like saying you get on the airplane and the pilot says, 10% chance we might crash on this flight. I mean, it's no different, right? And so we have to do everything that we can to ensure that our clients do not run out of money in retirement. So, doing this, my third decade doing this, and all I've done is retirement income planning, which is very specialized. There's a difference between gathering assets and managing money, into retirement, and then taking those proceeds and saying, how do I create cash flow? We tend to look at 401k plans and investment plans kind of like real estate, meaning that, if you own a rental property, you have the house, and we want to have a renter in there to pay the income. That's how I look at retirement income planning. Is I want to have cash flow, right? But I still have to have underlying assets that can also grow over time, right? The average age of my clients probably 65. Let's just be optimistic, say they live for another 30 years into their late 80s, early 90s. Not only do we want to have the income, but we also want to have growth of capital too. So it's a challenging on your own. It's very, very difficult. But the fact is that most clients that come to see me, again, 1 in 20, 1 in 30, really have an idea. One of our taglines is, you retire once, we retire every day. And I came, laying in bed with my wife that was kind of the boom. Okay, that's kind of what we do. And to help people feel more secure about, because we've done it hundreds of times, you're going to do it one time. Right. So we don't want to make a mistake. And so it's definitely a process and something that we enjoy doing for clients, but it's definitely more complicated than just putting your money in a 401k plan, for sure.
Yeah, and no do-overs or mulligans. So
No.
You want to do it right. And that's why these 12 questions on this resource, ladies and gentlemen, are so important for you to have addressed and have confident answers to. By the way, a great resource, a one-page 12-question report that you can go over on your own time to see if you feel you have confident answers to, or if you would like to design your retirement blueprint along with the help and assistance of an experienced experienced, qualified professional, the retirement architect, David Reyes. You can call and you can request a time to either design or to review and evaluate your current plan for retirement. 858-597-1966, 858-597-1966. And David will, of course, move through all 12 questions, as well as many additional aspects and angles of planning with you in that retirement blueprint strategy session. 858-597-1966. But if you just like the list, you can call and request that as well. You can go over it on your own with a spouse, loved one, maybe a coworker has been talking about retirement. Number 2 on this list, David, really the rubber meeting the road here. Have you identified and calculated your retirement income gap? Terminology that oftentimes we don't even hear about during our working career.
Yeah. What is the gap, right? It's like, if I'm a retiree, of course, doing this for a long time, we know what that makes sense because of just being in the industry. But the retirement income gap, what is that? Number one, it's really, I look at it first. The first question I ask a client, because it makes it really simple on their budgeting, what's your net paycheck every month? That's the first question I ask. And they got to think about that too, right? I don't care if you make 100,000, 200,000, what goes into your bank account after Social Security, FICA, pension, 401k. So let's say they say, okay, David, I make $10,000 a month. Okay. I get 5,000 every 2 weeks or whatever that is. That is the income. That's our bogey. That's where we're trying to start. Right. So which is a great starting place because most people haven't really done a real good budget in retirement. Most people they have some idea, but that's a great place to start. So the income gap is really what I'm going to get in guaranteed income between Social Security and pensions potentially. Only less than 10% of our country even has a pension. And so let's just say it's Social Security. That's the gap we got to fill. And then when are we going to retire? So if we're retiring early at 60, we don't get Social Security until 62. Well, our gap is really 100% of our income. So solving for that gap, what we're trying to do first establishes how much net income are they receiving today. Our first job, most of my clients will retire on what they earn. Not everybody, but a large percentage will retire on what their net cash flow is when they're still working. So that's kind of the baseline. And then we go from there. And of course, it depends upon other debts and liabilities. Do we have a mortgage? All those kind of things. But we're really solving for lifestyle. So the income gap is really that is kind of code word for Social Security and pensions. I'm going to receive lifetime income. And then how do we fill the gap with our other investments?
Yeah, and this list gets into that a little later down. Number 10, do you know the percent of your working career income you will need to replace to support your retirement lifestyle? I think that's Correct. What you're talking about there. But a little bit ironic, I think, that those that have been lucky or blessed or hardworking enough to earn a good amount of income, David, seem to pay a little less attention to the budgeting or cash flow. But at the same time, when those same individuals purposefully walk away from the paycheck, the shift in income and the amount of income their assets are going to need to generate for them is that much more substantial and significant.
It is actually. I mean, you're right. So the higher the income somebody makes, what you're saying is the more the cash flow needs to be produced from those assets to compensate for that. So, fortunately, most of the clients that come to see me are pretty conservative people. I got clients making $500,000 a year and clients making $100,000 a year. It just depends. But what's kind of funny is there's kind of a bandwidth regardless of cash flow needs, even for what I would consider more higher net worth clients or higher earners. And that is really between probably 100,000 of net income to 250. That's kind of the range, and almost no matter how much somebody has in assets, quite frankly. So the good news is the people that usually have money, it's because they save their pennies. And so it's not because they were like these astute investors and they were great stock pickers. Mind you, I work with a lot of professional people that have owned a lot of real estate and are very successful business owners. But the majority of people taking that out of the equation have just been really great savers. So yes, you're right. There can be an issue sometimes when let's say somebody's making $500,000 a year, right? In gross income. That same person might be only taking home $15,000 a month of cash flow after taxes, after deductions, after, contributions, 401ks. So really, because Uncle Sam, that cash flow that they need is maybe not too far off from what their net income is. And so, the fact is we really just start with what is the cash flow needs? What are they currently earning in net income? How do we, begin with the end in mind by taking that as the starting point for can we reproduce that cash flow? That's where I start, regardless of what the client tells me. That's what I'm going to do. And then we're going to work down from there, right? Because most people don't need more income. Sometimes that happens. But if we're just replacing somebody's paycheck, we're way ahead of the game.
Yeah, but the perception that we had maybe a generation ago where we would require significantly less income
Not true.
Magically in retirement, yeah, also not true. And you alluded to this earlier, David, but we want income, substantial, reliable income, but we also want growth on assets. So number
Yes.
3 question on this, are you ready to retire checklist? Do you know how much you have available in discretionary assets over and above what you will need to generate retirement income? And I think this is that question that a lot of people really have not worked through is what is over and above what's needed for those living expenses that I can still treat as though it is investment capital like I have always done during my working career.
Yeah, you're asking an interesting question on that, and is that we look at it. We have an investment process. I'm gonna end up writing a book around this. This is new. I've never even talked to you about this before, but it's kind of like the DART system. And what I mean by that, because think of like a dartboard. We're trying to be precise, right? We're trying to hit the bullseye. And so and this will get to your question, but DART stands for dividends, lifetime income guaranteed annuities, right? Real estate, and tactical growth strategies, right? So what you're making me think of is that what we do is we bifurcate the portfolios into cash flow and into growth, right? Now, sometimes with dividends, because we say if you're going to own stock, we want to get paid, right? Because I remember that rental property analogy. All my clients, I look at their portfolio like a giant rental property. I'm trying to produce cash flow, but I still want that property to go up in value. But I don't want to have to sell what I call the third bedroom of the house for income. That's not income. That's selling assets, which is dangerous because that's how we run out of money. So giving you kind of a longer answer, but that's almost, it's kind of like, that's kind of like art and science, right? So part of that's a lot of experience in dealing with this, because some assets are going to have both growth and income. If we have dividend paying stocks, right? Let's say we're getting 5% distribution rates on our dividend portfolio as an example. I still own the underlying asset. So I'm getting my cash flow, right? And I still can have growth potential. I still have opportunity to lose money too. Let's use real estate. We like hard asset, physical real estate that we can actually invest in institutionally through retirement accounts, through direct investment, where we actually own the physical asset. So theoretically, we get our cash flow or income, and then we also own the asset. The only area where I like, I haven't said bonds yet either, right? I'm not a big bond fan. Bonds are probably one of the most misused allocation of assets in retirement because, especially the last decade, they've paid very little to no interest, right? We want cash flow. And this last year, they've lost a lot of money, depending upon where you're at, between 10 to 30% of assets. So we have to be more precise. If I need more income than my assets can probably provide, that's where an annuity is probably going to be a good risk mitigation tool, where I can replace some of my assets that I'm probably not going to have down the road. But now if I'm getting 5-6% cash flow and I can eliminate or reduce the risk of the overall portfolio, I may use that. So we want to do both. Typically what I'll do, let's say somebody has $2 million and I can use $1 million for cash flow. I'm going to then separate out the cash flow from the growth. So then I can take them 1 million. Here's the income we're producing. Let's say it's 50,000 a year. And then the rest I can own growth assets, right? So I think that's getting to the heart of what you're asking. And most people don't have enough money to do that as far as splitting 50-50. Most clients were going to probably be about 60, 70, 80% of their assets need to generate cash flow. And maybe 20, 30% is going to be just for pure growth without income.
Well, and I think that naturally segues into question number 4 on your checklist here. Do you know if your portfolio is properly diversified to provide safety, growth, liquidity, and income? Those are different aspects, different quality of different dollars, and money is generally a terrible multitasker. And so we need to assign the job, the specific priority of each and every dollar.
Yeah, I call it diversification, right? And because it's like people have a 401k plan and they have 15 different mutual funds and half of them own the same stocks, and they have a bunch of bond funds. So their two asset classes are stocks and bonds. They might own 2,000 stocks in 10 mutual funds and 50 different bonds in bond funds. So and again, bonds are not a big piece of our retirement income planning. So yeah, we talked about the DART portfolio, right? Dividend paying stocks, real estate, potentially guaranteed lifetime income annuities, right? And then tactical growth strategy. So right now we're really in 3 asset classes and 4 different strategies, right? That's how you diversify. That's how you not only create more safer portfolios, but produce more cash flow.
Well, this is a fantastic resource, 12 questions, thought-provoking topics to make sure that you are financially prepared for retirement, a confident retirement. By answering all 12 of these questions, it will significantly benefit your outlook in your financial progress and future. If you'd like the list, again, the Are You Ready to Retire? Are You Prepared for Retirement checklist, pick up the phone and give Reyes Financial Architecture and the retirement architect David Reyes a call, 858-597-1966, 858-597-1966, or you can visit online, reyesplan.com. That's REYES plan.com, reyesplan.com. Great checklist here, David, and I think anybody would benefit in their financial confidence by going through this and making sure that they had answered and addressed each one of these, or if we don't have a confident answer, to come in for that review and that strategy session, the retirement blueprint that you helped design.
Yeah, I'd say it takes probably about 10 hours to do this. So that's hopefully their diligence on their own, but something we do every day. So we're happy to help people to go through this process and have somebody to kind of hold their hand.
Again, if you would like to receive the checklist or to have that strategy session and design or review your current retirement blueprint, pick up the phone, give Reyes Financial Architecture a call, 858-597-1966. Always a pleasure, David.
Thank you very much.
Thank you for spending your time with us again this week. Get the most out of your retirement plan. Call 866-REYES-PLAN. That's 866-REYES-PLAN, 866-739-3775, or visit reyesplan.com.
No information presented today should be acted upon without meeting with a qualified and licensed professional. Reyes Financial Architecture, Inc., RFA, is an SEC-registered investment advisory firm. Such registration does not imply a certain level of skill or training. For a copy of RFA's current Form ADV 2A brochure that includes a description of services provided, fees charged, and other important information, call 858-597-1966 or go to advisorinfo.sec.gov. RFA also is a licensed insurance agency with the state of California. License number 0G66604. This show is provided for informational purposes only. Opinions expressed in the show reflect RFA views as of the date of the recording and are subject to change. Nothing should be construed as a comprehensive statement of the matters discussed, considered investment, financial, legal, or tax advice, or a recommendation to buy or sell any type of security, and no investment decision should be made based solely on any information provided. Any forward-looking statements or forecasts discussed are based on assumptions, and actual results can vary from any such statements. Some of the information provided has been obtained by third parties and believed to be reliable, but not guaranteed. Past performance is not an indication of future returns. With respect to any discussion about RFA investment strategies, there's no guarantee that they will be profitable or perform as described during the show. RFA or one or more of its employees may have a position in the securities discussed and may purchase or sell such securities from time to time. All investments in securities carry risk, including the risk of losing principal amount invested. Different types of investments involve varying degrees of risk. There can be no assurance that any specific investment or investment product will be profitable or suitable for a particular investor's financial situation or risk tolerance. Asset allocation and portfolio diversification cannot ensure or guarantee better performance and cannot eliminate the risk of investment losses. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing insurance company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Surrender charges apply to base contracts. Optional life income benefit riders are used to calculate lifetime income payments only and are not available for cash surrender or in a death benefit. Fees may apply. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. Rates and returns mentioned on this program are subject to change without notice.